The broadcast is now starting. All attendees are in listen-only mode.
All right, good morning, everybody. We'll give everybody about another minute, and then we'll get rolling with today's webinar. All right, good morning, everybody. My name is Glenn Maxim. I'm a Trade Ally Liaison for the People's Gas and North Shore Gas Energy Efficiency Programs. Today's Trade Ally webinar is double dipping federal tax credits with utility rebates. First on the agenda, we'll go over program reminders and rebates, and then we'll get into the double dipping of federal tax credits with utility rebates with Ryan Hoger. Trade Ally landing page. Now, this is our existing Trade Ally landing page, People's Gas, North Shore Gas, tradeally.com, where you can access valuable resources. You've got program documents, upcoming events and webinars, past presentations, training videos. So a lot of these, all our past webinars or stuff are uploaded to this link. We got case studies on there, program updates. Like I said, you can find all the documents on there. We are moving to a new Trade Ally landing page. It'll be sometime in June. You'll get notified by email. It'll also be in the BTU newsletter if you receive that. The new one's going to be at www.tradeallycenter.com. A little bit shorter, so hopefully it's a little bit easier for you. Like I said, that's going to be launching next month, and we will definitely send out info on that for everybody. Future webinars, future training webinars. We've got heat recovery chillers, dual fuel heat pumps, understanding gas and electricity utility bills, CO2-based demand control ventilation, in other words, DCV. We're also going to talk about energy recovery ventilators, ERVs, and hydronic system fundamentals later in the year. Training requests. If anybody has any training ideas or something you would like us to get some training on or do a webinar on, just get a hold of me. Something, like I said, anything you want, we can get it in this year. Here's my contact information. Who are you going to call? Call Glenn. That's my cell phone number. Can be reached pretty much any time on that, or an email, gmaxim@franklinenergy.com. Also, the rebate applications, like I said before, are People's Gas, North Shore Gas, tradeally.com, or just go hold of me and I can put you in the right direction, especially if you got projects, any questions about that. I can get you right to the energy advisor that's assigned to that customer and help you with your project. All right, I'm going to be sharing this now. We're going to have Ryan Hoger, the Director of Training for TEC. I'm going to pass this off. You got it, Ryan?
Just go ahead and share my screen.
You've got control.
Yep, I'm good.
Thank you, sir. Take it away.
Awesome. All right. Thanks for having me back. It's been a couple months since I've joined you guys, but I got a bunch of stuff on the schedule. Probably half those things Glenn listed off I'll be with you guys for. Today's a little different than normal. It's a little less technical than we're used to, and it's more the mechanics of how the money side works, which I know is not always fun, but the amount of money available is so insane that if you don't pay attention, you're going to be left behind for sure. We are going to mix residential and commercial today, even though I know most of the audience is commercial, but every one of you has a house, so you are also residential, and you also, most commercial companies deal with some homeowners as well. So we'll touch on both, but we'll start off with the tax credits for both, and then we'll hit the utility rebates, specifically focusing on the ones that double up with the tax credits nicely. And then we'll give you some examples of scenarios in which you can double up very favorably. There's no problem with double dipping on a tax credit and a utility rebate. There are other things that you can't double dip, and I'll explain a few of those, but tax credits and utilities you can with each other. I got to get this disclaimer out there that I am not a good lawyer, and reading the tax code and the IRA language is not my idea of a fun time. And I'm also not a tax pro, but I do know how to use TurboTax, so we're all good there. And I stayed at a Holiday Inn Express. So starting off residentially, the two tax credits that are of most interest to the guys on this webinar and gals are 25C and 25D. These are tax credits, which is extremely different than a tax deduction. Everybody mixes those two things up, and I don't know if it's just a vocabulary thing that people have an issue with, or they literally don't know how they work. So we are going to briefly explain how they work. So here's two examples with nice even numbers to make everything clean. Let's assume you have a $100,000 income in your family, just to make the math easy for myself here. And let's assume your tax rate ends up being 12% after all of your mortgage deductions and all those wonderful things, right? So if you got a $3,000 tax deduction, what that essentially means is, for the calculation purposes, the IRS pretends you only made $97,000 that year, and then you pay 12% in this example of that $97,000, right? So you owe $11,600 in taxes. However, if you have a tax credit, you still calculate your taxes as if you made the $100,000, right? So that comes out to however much it ends up being, $12,000, and then you get $3,000 subtracted off of there, so you only pay $9,000 in taxes for the year. So basically a tax credit comes right off. It's equal to cash. Well, it's not equal to cash because you got to wait till next year when you file your taxes to get the money, right? But other than waiting till next year, it's equal to cash. Whereas a tax deduction is just a much smaller amount. So in this case, the tax deduction only equated to $360 for a $3,000 tax deduction versus $3,000 for tax credit. So tax credits are way more exciting and interesting than a tax deduction. All right, so let's keep that in mind as we look at these. As far as a tax credit and a utility rebate, the biggest difference there is the utility rebate you're getting almost instantly. In some cases, you do get it instantly as a homeowner or a building owner. It's a line item discount off of your invoice from your contractor. In other cases, you get a check in the mail a few weeks later. Whereas a tax credit, as I mentioned, you're going to get that when you file your taxes next year. So in 2024, you file your 2023 taxes, and that's when you get your money back on that side of the equation. All right, so the ones that we're concerned with mainly right now are 25C and 25D. We'll talk about 179D a little bit later, which is commercial buildings. And I left 45L up on here just so you realize there is some stuff for new construction homes if you get involved in that. But we're mainly focused on existing systems. Let's talk about 25D first, because this slide is the only one I have that relates to that, because it's not super common. That is the tax credit that would involve geothermal heat pumps. That tax credit was kind of on a phase out over the years, giving you less and less money over the years until it was finally set to expire at the end of this year. However, the IRA, Inflation Reduction Act, renewed that starting for 2023 through 2035, so another 13 years, and it set the clock back up at the 30% mark. So for the next 10 years, if you install a geothermal system, you can get a 30% tax credit on the cost of installing that system. What does installing that system means? It means your heat pump or heat pumps. It means your drilling, your field loop, your piping, your labor, your air handling equipment. All of that stuff is included. Anything that relates to installing that geothermal heat pump system would be eligible for the 10%. So if it cost you 50 grand to put a geothermal system in, probably should have made numbers easier on myself. That's a $15,000 tax credit. So it literally subtracts off the amount of taxes you owe. One thing to keep in mind with tax credits is you have to have a tax liability. So like in this previous example I gave you here, if you only owed total for the year, if you only owed $2,000 in tax credits, you cannot get a $3,000 tax credit. Excuse me, if you only owe $2,000 in taxes, you could not get a $3,000 tax credit. So you'd only gotten $2,000. When I say oh, I don't mean how much you write the check to the IRS for at the end of the year. I mean how much you paid in total taxes, including your payroll deductions and everything that's on there, right? So for a lot of people that own homes anyway, you would have enough tax liability for most people in order to get the tax credit. However, if you got a geothermal system, perhaps you don't, right? So my example, the $50,000 system, you get 30%, which would be $15,000. Maybe you only owed 10 grand total, so hence you wouldn't get 15, you would get 10, right? 25C is the one that most of you will deal with for any residences that you own or that you help customers with. This tax credit has been around for well over a decade, and it's weird because like every couple of years it would expire, and then the legislators would have to vote to renew it. And it was a $500, most recently for the past 10 years or so, it was a $500 lifetime maximum. Once you got your $500, you were done. You could never get more money again. And additionally, you were used to only be able to get $300 for an AC or heat pump, only $150 for a furnace, and only $50 for the fan inside the furnace. That is now changed, and now you can get $1,200, and instead of it being a maximum for a lifetime, it's a maximum per year. So let's say you had 2 air conditioners and furnaces, you could replace one of them this year and get $1,200, $1,200, and then do the other pair next year and get another $1,200. There's no lifetime limit. It's only a $1,200 annual limit. Additionally, some of the things that are in there have a smaller individual limit than the $1,200. So like I'm showing on the screen here, a furnace caps out at $600. An AC, $600. A water heater, $600. I think windows are like $500 or whatever they are. I don't really pay attention to the non-HVAC stuff. But each thing, most of the things, major things, have an individual limit. And then collectively, they can only add up to $1,200. So let's just pretend Windows had a $500 cap, AC was $600, furnace was $600, and you did all 3 of them this year. That would add up to $1,700, but you could only get $1,200 because that's the cap for the year. All right. Then unrelated to that, completely unrelated to that, there is a $2,000 heat pump limit that applies to air or water heat pumps. So like a domestic hot water heater is a heat pump, right? So there's a $2,000 limit for that. It's a larger limit because obviously they're trying to incentivize you to utilize some heat pump technology. So let's say you did a furnace with a heat pump. You could get $600 for the furnace and you're still under your $1,200 cap. And then you could also get $2,000 for the heat pump, which is the heat pump cap. You could get $2,600 if you did a dual fuel system combining a furnace and a heat pump. As anybody comes up with any questions, if you type them in the chat box, I'll kind of babysit that, or rather the question box would be preferable. But if you type them in the chat box, I'll try to pay attention to that too. But if you type them in there, I will try to answer them. I'm assuming there's going to be some questions. And as long as it's not about your personal taxes, we should be in good shape. Actually, even if it is, we'll probably be in good shape. All right, so let's continue on and we'll dive a little deeper into that and how that works. This is the language. These are just on here for people that want to see it on the slides. This is literally the IRA language. There's just like 100 pages of this that you got to like comb through and try to find stuff. But this is where it establishes that you can do this kind of thing for air conditioners, heat pumps, boilers, water heaters, furnaces, etc. are included in this tax credit. One of the best places usually to get the detailed information on the tax credit is the Energy Star website. However, there is one error on the site, 2 errors on the site. I will point that out to you just so you know about it. There's no error on this one. So this is furnaces. You can get 30% of the cost of the furnace installation up to a maximum of $600. So let's just say, to make the numbers easy, you spent $10,000 on a furnace. That means you could get 30%, which would be $3,000. However, there's a $600 cap, so you'd be capped at $600 on the furnace. In order to receive this, the furnace must be a 97% efficient furnace. If you put a 95 or a 96 in, you do not qualify. The old system used to be 95 up until the first of this year. Now it's a 97% efficient furnace to get the tax credit. there are nowadays, in the past 10 years, there are a lot of models that hit 97. So you should be able to find that. One thing I should point out on all of the things that we mentioned today, you need to be looking at the AHRI certificate for the efficiency on there. Do not look at the marketing literature or the model number of the thing. And if somebody says something's a 16 SEER AC, it may or may not really be a 16 SEER. That may be what the marketing people say. And I apologize to my marketing friends on the call, but it may be 16 SEER is like the best combination. But when you combine it with what you used on your project, it may only be a 15 SEER, right? So you got to use whatever the AHRI certificate says. So, but getting a 97% efficient furnace is not super hard anymore these days. So you can get that tax credit there. We're mainly focused on natural gas here, but other types of fuels could also be eligible. But obviously our market is naturally gas driven. And this dollar amount is for starting January 1st. So if you installed something a few months back, you're still eligible when you file your taxes. If you installed it back last year, then you're on the old system, not these current dollar amounts. I don't see any questions yet, so I'm going to keep talking. Boilers work exactly the same way that a gas furnace would work. 30% up to $600. And by the way, that 30% of the cost, it's the cost of installing the furnace, not just the furnace, but the cost of installing the furnace. So obviously there's some labor associated with that. Maybe the furnace costs $5,000 and then you got $2,000 of labor, right? So now you're up to $7,000. Maybe you have to make some ductwork changes for it to physically fit. That counts. If you are doing work as part of that project that does not directly relate to the furnace, it doesn't count. For example, if you install a humidifier as part of the project, that doesn't count, right? If you installed some kind of air purifier, that doesn't count. But the furnace, the gas piping to it, the sheet metal connection to it, things you have to have for the furnace to do its thing, that does count, right? The way that works, I don't know if you guys saw in here, but the highlighted in yellow there, the efficiency you have to be for all of these things for the new IRA, which starts this year, 2023, is the highest efficiency tier, except any advanced tiers that are posted by CEE on the first day of the year. So whatever CEE posts on January 1st, whatever's on their site then, in their documents, in their spec literature, you have to be the highest CEE tier, but it excludes any advanced tiers, which sounds weird, right? But there are these things called advanced tiers, like I'm showing right here, that does not apply to our life in any way. So for furnaces, they have 3 tiers, 92, 95, 97%. You've got to be the highest non-advanced tier, which in this case is tier 3, 97%, as we just mentioned. For boilers, there's only 2 tiers, 1 and 2. You got to be the highest, tier 2, so you got to be 95% efficient rating on here. If there's any questions, type them in, man. I like questions. All right, even though we're on a gas webinar, I'm going to mention AC because most furnaces around here get connected up with an air conditioner. So you might as well maximize your money there. Double dip, if you will. So the AC credit is exactly the same as the furnace credit. It is 30% of the installation cost, up to $600. And in this case, the Energy Star website here is telling you you have to be 16 SEER 2. SEER 2, by the way, is different than SEER. I'll explain that in a minute. But you got to be 16. What this site is not showing you is that you also have to have an EER that is met. So this site is slightly wrong, or not wrong, but it's slightly missing something on here. So specifically for an AC, you have to be 16 SEER 2 and 12 EER 2. Once again, we skip that advanced tier. It does not apply to us. Although in this case, it's stupid because the advanced tier is the same as the regular tier. I don't know who makes this stuff. It just is what it is, man. So you got to be 16 SEER 2, which is not super hard to achieve. It's a pretty efficient unit, but it's not like it's hard to find those. But then you have to be 12 EER 2, and that is a little bit harder. There are 2 major ways that air conditioners and heat pumps get more efficient. One of those ways is to put in a variable speed compressor with a variable speed condenser fan and get more efficient that way. The other way is to put in a unit with a much bigger condenser coil surface area. Larger, wider, taller, bigger unit, more metal in it, more surface area. EER does not really get helped or improved by putting in variable speed stuff. EER efficiency really only comes from bigger surface area of condenser for the most part. So SEER 2, it's easy to get units that do that because you can get really big units, physically big units, or ones that are modulating. EER, you pretty much have to go with the bigger units. So keep that in mind when you're hunting for a unit on there. Package units, which we don't use around here often, it's basically a small rooftop unit ducted into the side of your house. But you will find this on like 3 flats and stuff like that. So in the city of Chicago, up on the top of the building, you might find some of these small packaged units. And this is the efficiency level, 15.2 SEER2, 11.5 EER2, that you'd have to hit on a packaged unit for that homeowner to be able to get a tax credit. The SEER versus SEER 2, we've had SEER for decades and decades and decades. I mean, really a long time. When I started in the 90s, we had SEER, right? We had EER. Those were normal things that we had. And the HSPF, for those that don't know, that is heating seasonal performance factor. That is only for heat pumps. It is kind of like SEER, but on the heating mode side. All of those things used to be tested at 0.1 inches of external static pressure, which is very close to nothing. It's very little resistance. It's basically like, hey, if I put 5 feet of duct on this furnace, how restrictive would it be, right? Let's go ahead and do that and test the unit. The new testing standard that began this year, we have to test all the equipment at 0.5 inches of external static pressure, which means the indoor fan has to run at a higher wattage in order to move the amount of air we need to move for the AC. So that does, in fact, change our rating. All AC and heat pump ratings are a combination of the air conditioner or heat pump, the indoor coil, which for an AC we would call the evaporator coil, and the indoor fan system. All work together as a team to get the rating. So the more restrictive the ductwork is, the less efficient the fan system is going to be, and the lower your SEER, EER, and HSPF will be. In order to distinguish between the old and new ratings have a little 2 after the name. SEER 2, EER 2, etc. This is just in here, once again, right out of the IRA language, just to show you the $1,200 cap per year. And then certain things have individual caps like windows, AC, furnaces. And then down here at the bottom, showing you that heat pumps have a different bucket of money they come from with a different cap. So let's talk about heat pumps. Once again, it's kind of weird we're talking about heat pumps on a gas utility webinar, but hopefully it all ties together in your brain here in a minute on why this is going to be important. This site, also Energy Star site, is wrong. It's completely wrong. So do not use the Energy Star site. It is in error. Specifically, if you go on the site even today, it says it's dated December 30th, 2022, and they've not updated it. And I don't know what's going on there. I kind of feel because the CE tiers are not the same as Energy Star tiers. They're close, but they're not the same. I kind of assume in my head the Energy Star people are not happy that starting this year, everything is no longer triggered off of Energy Star like it used to be on the old tax credit system. So I think they just keep putting their stuff out there as if they were in charge, but they are not. So do not use that site. It does not line up. This is what you need to use for heat pumps. If you have a ducted heat pump, meaning you're going to combine it with like a furnace or even an indoor air handler, you got to be the highest non-advanced tier. So you got to be 15.2 SEER2, 10 EER2, 8.1 HSPF2, a new thing, which is 1.75 COP on a 5-degree day outside. It means you have to be 175% efficient when it's 5 degrees outside. And you have to have one of these 2 capacity ratios. You have to meet all 5 of those things in order to get the money. It's very hard to get all 5 of those things. Most systems will not get all 5 of those things. You will have to actually try to find this system in advance. There are systems that do it. There's thousands of them, but compared to hundreds of thousands of combinations of ones that don't meet it. But you have to hit all 5 of those things in order to get there. If you went off the Energy Star documents, it is harder on some of these things. So definitely do not pay attention to that. And they only have 3 of the 5 metrics listed, and they're the simpler things. Definitely go to this one here. If you have non-ducted, which most of us just call ductless, so if you got people that have, say, boilers in their house, maybe they got a really nice boiler radiant system, you upgraded them to high efficiency boilers, got their utility rebates and their tax money, and they're like, hey, what about cooling, bro? All right, maybe one of the things you would do is put in a ductless mini split system on some of those rooms. If you want to get the tax credit for that, you got to be the SEER 2 from CEE, which is 16.9, 9.5, 1.75, and then either of these 2 capacity ratios. And then there's package systems, which once again are basically little rooftop units, if you will, but are used in a residential application. And here's what you have to hit for those. This is here to hopefully just make your life easier. It's a nice little cheat sheet that we use. I can send that to anybody who wants it. That shows you the categories of stuff, what levels you have to hit, and how much money you get. By the way, there's also different efficiencies you have to hit if your home is in the South. I ignored those because we're in Illinois and we don't care about the South, right? But if you have a vacation home in Florida or something, the buckets are different on what you have to do down there versus what you have to do down here for heat pumps anyway. Moving on, there are some other tax credits you might be interested in. One of those is a gas-fired water heater. So you can get 30% of the installation cost of a gas-fired water heater up to $600. Water heaters don't typically cost as much as a furnace, boiler, or AC would, so it might be a little harder to get the full maximum 30% on there. But if you go with one of these high efficiency units, it is going to be one of the more expensive units. So it's not going to be, $1,000 install. It's going to be more than that. So you should be able to get most of this $600 on here. Here's the efficiencies that you have to hit. So once again, highest non-advanced tier. Most people have 40 and 50 gallon water heaters. So you have to have a 0.81 uniform energy factor, right? So it's basically an 81% efficient water heater, essentially, if you want to think of it that way. So you can get that there. And then obviously if you have bigger units, there's different efficiency ratings that you have to hit. If you go tankless, which is also an option, a lot of people like to do that to save space in their mechanical room and stuff like that. You got to be the highest non-advanced tier, which is tier 2, which means you got to be a 95% efficient heater. Tankless water heaters are usually pretty efficient because not all, the vast majority of tankless water heaters are condensing water heaters, right? Whereas tank water heaters, the vast majority are non-condensing. There are condensing and non-condensing tanked, and there are condensing and non-condensing tankless. But for the most part, tank means non-condensing, so 80-something% efficient is usually where you'll end up, and tankless is condensing, so you'll be in the 90s typically. But you do have to make sure, once again, that you get an AHRI certificate showing you hit the efficiency you want. By the way, when your customer or yourself are applying for this money, you are doing it on your taxes, and most of you have probably done your own taxes at some point and realized at no point in time does it ask you to upload an AHRI certificate or anything like that. It just says, did you make energy efficiency improvements on your home? And if you say yes, then TurboTax or whatever asks you a few more questions, but doesn't ask you for the documentation. What I highly recommend everyone does is before they install the system, find the AHRI certificate, make sure it in fact qualifies, and then print it or save it as a PDF on your computer, whatever way you want. But save that, because sometimes the efficiencies change over the months and years as things get re-rated. So you don't want to find something that qualifies, and then later on you get audited a year, 2 years from now, and you're digging around for an old certificate on a website that doesn't exist anymore. So print it off, throw it in your tax file, and have it there. The only time you'd actually need the certificate physically would be if you got audited, right? And always assume you're eventually going to get audited, because sooner or later in your life, you probably will get audited. Right? And if you're a bad person, you might get audited all the time. We do have a question from Matt. What website are you pulling these from, if not Energy Star? So for example, the screen here, the ones I have highlighted like this in yellow, these are off the CEE site. So Consortium for Energy Efficiency. If you go on there, you can download documents that have the current specs for each of these categories of products. So I downloaded all of those, and then I screenshotted the categories of products that I cared about and threw them into the PowerPoint here, and then highlighted them in yellow. So you can do that, or if you are lazier, which I'm not saying Matt's lazy, but I'm lazy, at the end of this, my email will be on there. You can send me an email, and I'll reply back to you with these screenshots so you don't have to hunt them down. Or you can go on the site and find them for sure, because if you're like me, getting it from someone else is good, but getting it from the actual raw source means I'm going to probably be more right. You can also do a heat pump water heater. So heat pump water heater is a heat pump. So it doesn't go in the $1,200 max bucket. It goes in the $2,000 max bucket. So you can get 30% of the cost of the heat pump and its associated installation up to a maximum of $2,000, right? So if you spend $5,000 to install a heat pump water heater, I'm just making up a number. I have no idea how much these things cost. $5,000, 30% of that would be $1,500. You can get $1,500, not $2,000, right? But if you install one that costs more than that, or you install two of them side by side or something, then you could obviously have a better chance of maxing it out. Here's the specs for heat pump water heaters. You got to be a 3.3 uniform energy factor. That means you have to be 330% efficient. If you're not sure how the hell we're being more than 100% efficient on any of this heat pump discussion, you can tune in this summer. We have a heat pump webinar And that'll help explain some of this to folks that are like, what the hell is this dude talking about? 100% is the most you can do of anything. That is not actually correct. Heat pumps are more than 100% efficient, which I know is crazy. And then there's other kinds of heat pumps you could, in fact, have, like a split one, which is super rare. But the top one there is the normal heat pump water heater that you would see. There's a few other things that might be helpful to you. You can do a home energy audit and get that as a tax credit. It's not a lot of money. It's 30% capped up to $150. So if you have someone come in that you've paid, it can't be someone doing it for free. It can't be your neighbor. It can't be a free utility audit. It's got to be a paid thing. You can get part of that back on your taxes. And they go through. Presumably, you'd want to do this first. I probably should have made this my first slide, right? You'd do this first, and they would tell you all the things you might want to do to improve your house to save energy. And then you would decide, hey, am I putting a new boiler in? Hey, what am I doing here to make this more efficient? And you'd go back and do those things. But you can, in fact, get this as well. And there's other stuff, too, that are not really, directly HVAC related, like, insulation, windows, things like that you can get credits for. That I'm not going to go through today because they're not really HVAC specific. But there are some other stuff out there as part of that same tax credit kind of mentality. This is one that you may not think of a lot. We've done some AeroSeal commercial webinars with you guys in the past. Just want to mention that AeroSeal is available residentially as well. In fact, that's the most popular way to do AeroSeal. If you're not sure how AeroSeal works, go back and watch one of the recordings on the commercial ones we've done, and you'll understand the process. But it is a duct sealing methodology. And just like some of these other things, it saves energy, and you have a way to verify the energy savings. So therefore, you can go ahead and apply for that 30% tax credit on that. It'll be hard to max that out because that usually costs, like, I'll make up some numbers again, $2,500, $3,000. Let's just say $3,000 to make my math easy. So that would be $900, be 30%, right? But it's another set of free money. Maybe you're doing a furnace upgrade, but you don't need a new AC. So you put a furnace in, you get the furnace tax credit, you get the furnace rebate from North Shore or Peoples, or any of your utilities if you're outside of that area. And you do duct sealing at the same time, you could get duct sealing rebate and duct sealing tax credit. You can bundle all those things together. So we'll do some examples of that as we kind of move through here. That's just a slide showing you the limits, because people often ask, hey, does the $1,200 part of the $2,000 and vice versa? Two separate buckets. So you could get $1,200 and then you can get $2,000 on a heat pump. So if you put in a gas furnace with a heat pump and duct sealing, you can get $2,000 for the heat pump. You can get $600 for the gas furnace, and then you could get the other $600 of the $1,200 on the duct sealing for a maximum of $3,200. So you could get pretty good amount of money back on some of these things if you combine them the right way. All right. Any other residential tax credit questions? All right. I'm pretty good with the residential tax credits because we've had those for a long time, and they come up literally for me every week for like 15 straight years. The commercial tax credits are not as commonly used. They've been around just as long, but they're not as common because they're much harder to get. So I'm not going to be as deeply educated on that, but I'll be able to get most of you guys up to speed, I think. So 179D is the main commercial building tax credit that is most similar to the 25C that we've been talking about, which is improvements in your HVAC and building envelope and those kind of things. All right, so this is a tax deduction, not a tax credit, right? So this deducts off of your company's total profit of the year. So let's just say you did a project, I'm going to make up some random numbers. Let's say you did a project that cost you, or that was eligible for a $100,000 tax deduction, and your company had $1 million in profit. Basically, it's like you take the $100,000 off of the million, and you pretend your company only made $900,000, and then you calculate your taxes. It is not as good as a tax credit. It's still really nice, right? It's still free money. Still incentive to do the better, more efficient thing, but it's not like a tax credit like the residential stuff. It's a tax deduction, right? So just kind of keep that in mind as we're talking. This does apply to new construction and retrofit, although you're probably not going to do it as much on retrofit, to be quite honest. There are some cases where it is the best way to go. Other cases it's not. I'll point those out in a second. One thing that does come up a lot is if you're a not-for-profit, right? Let's say you're like a church or a school. You don't pay taxes because you're not for profit status. So a tax deduction doesn't doesn't do anything for you because you don't pay any taxes. So deducting $100,000 off of nothing doesn't really help you. In those cases, if you're a not-for-profit, and we'll go through some categories of what not-profits qualify, the designer of the system can take your tax credit. You can literally sign a document that gifts it over to them, and then the professional engineering firm or the architect or one of those entities can do it for you. If you're a school and you do your work through ESCOs, the ESCO can take the tax deduction instead. So maybe you do a gut rehab on your school or your church or whatever it is, and then what you decide to do is you don't pay the architect at all. They do it pro bono for free, but you gift them your tax deduction as their payment, and that might be considerably more than the actual fee they would have collected anyway. And it's better for both of you, right? Because then you get free design services, and they get this giant tax deduction that was worth more than the actual cost of the design work to begin with, perhaps. So there are ways to kind of work that out. You just got to kind of plan for that. But there is a way to get it done if you're a not-for-profit business. This is the tax deduction we've had for a long time, for decades. It got updated in 2021, and it was supposed to continue on after that. But then the IRA Act, a couple months before the first of the year, August 2022, changed that for 2023 going forward. So this is what it was. I'm putting this up here because you can go back in time, and if you did a project 6 years ago, you can go back and claim the tax deduction on it right now for the project you did 6 years ago, right? All the way back to 2006, it's retroactive to. So you can go back and claim some of this money. So the way it used to work is you had to energy model your building as if you did it per code, and the code that is the baseline is ASHRAE 90.1 2007, which is very similar to IECC 2009. You'd energy model your building based on that. Then you energy model your building based on all the things you did to improve your building. And if you saved 50% of that, you would get $1.80 per square foot. And that was increasing to $1.82, and then last year $1.88. Alternatively, what you could also have done is, let's say you only improved the HVAC. You put in a brand new boiler and chiller plant. You didn't touch the windows or anything like that. What you could do there is, as long as you saved 15% on your energy model, you could get 60 cents per square foot. And then more recently, last year, 63 cents per square foot. Right? Or you could have done the same thing for just the envelope or just the lighting, or two of those. If you did not improve the whole building, you could have taken a partial credit and gotten basically a third of the money. And it's a pretty good amount of money. Not as good as it's about to be in a second, but it was a pretty good amount of money. So just keep that in mind. Keep this slide in your head for anybody that has done commercial work prior to the first of this year, from 2006 through 2022. If you did commercial improvements, it's got to be a lot. It can't be like we changed out a rooftop. You're not going to save 15% of all the HVAC usage by changing out one rooftop. It's got to be a lot of work, right? You got to have done a major rehab. Matt sent a question in. I recall a $500 per heat pump installed going to the installation contractor beyond the 25C tax credit. How does that work? I'm not familiar with anything about that. I've never heard of any way for the installation contractor on a residential home to get the tax credit instead of the homeowner. You might be mixing the tax credit in with some sort of rebate that was available from someone, possibly. I'm just guessing. If you have further information on how you want me to address it, I can try to do that, Matt. All right, so the changes for the commercial 179D tax credit. Here's what's changed on it for 2023 going forward. For starters, it used to be that only governmental nonprofit buildings could count for the nonprofit, gift to the installer or designer, excuse me. But now it's pretty much all not-for-profit groups. I'll give you a list of them in a minute, but federal, state, county buildings, private hospitals that are not-for-profit, Indian casinos, anything like that that's a not-for-profit and has not-for-profit status would be able to qualify, not just governmental like it used to be prior to this year. The individual deductions for lighting, HVAC, and envelope, that goes away. You can no longer do that where I'm like, oh, I'm only going to improve the boiler plant and the chiller plant. That's it? No. Now it has to be the whole building. You could still just only improve the boiler and chiller plant. And if that is a ginormous improvement, maybe you'd have enough total savings to qualify. But chances are you're going to have to be a little bit more holistic and do more than one thing at a time. So maybe it's a lighting project and an HVAC project, in order to get enough money for this to be fun. So instead of up to $1.88 per square foot, it actually goes down to $1 per square foot. If you were 50% improvement over ASHRAE 2007, you would get $1 instead of $1.88. However, if you're not 50%, you can now actually get as low as 25% improvement and get 50 cents. So essentially, they've traded off this lighting HVAC envelope individual buckets for a more holistic approach. But instead of having to be 50% on the holistic approach, you could be as low as 25%. So you get anywhere from 50 cents to $1 on there. 50 cents corresponds to 25% improvement. $1 is 50% improvement, and anything on that scale in between. Additionally, and more exciting, if you meet certain prevailing wage requirements and apprenticeship requirements, instead of 50 cents to $1, the scale goes from $2.50 to $5. If you made a 50% improvement in your building over the old 2007 code, right, then you did prevailing wage and labor project, you can get $5 per square foot, which is an insane amount of money back on your taxes. In addition, there's two ways you can calculate it. Instead of doing the energy modeling way, if you want, there's a way to do an energy use intensity, kind of like the Energy Star Portfolio Manager. You can use that kind of method to quantify the savings if you don't want to do a whole energy model. Obviously, you can't do that for new construction. You can only do that on existing. So energy modeling is for existing and new construction. The energy use method would be only for existing buildings. Additionally, it used to be a one-time credit and then you're done. You can never do it again. Now you can keep doing it over and over again. So 3 years after you did this improvement, you could do another project and really amp up your energy savings again in your building. And you could then qualify again for it. It's kind of hard to keep doing that every 3 years. At some point, there's not more energy to save, right? But theoretically, you could do that. Here's a kind of a list of all the kind of tax exempt, not-for-profit buildings that you could gift their tax credit over to their designer, right? So a regular business, they take the tax credit. They cannot gift it. They have to take it themselves, or not take it at all, I guess. But then not-for-profits of the types on this page could gift it over to their designer, and the designer could take the tax credit. So how does this kind of quantify out? This is the low end, the 25% improvement over the 2007 ASHRAE standard. And this is the right is the 50% maximum side of the equation, right? So if you go with make things nice and easy, 100,000 square foot building, that corresponds to $250,000 to $500,000 tax credit. If you did the prevailing wage apprentice version of it, which I think you'd want to do it. If you're going to do it, I think you'd find a way to make that happen. So it could be some pretty big tax credits here on some of these buildings. Excuse me. I said tax credit, tax deduction, excuse me. Big difference there. So with that being said, you may not want to do this. The two best cases to use 179D are new construction, commercial new construction, and residential buildings that are considered commercial. So that is greater than 3 stories, right? So you do a condo building, for example. That's a commercial building, but for residential people, right? So a true new construction commercial building or a residential large building would be great candidates for this. What is not a great candidate for this is a commercial building that's existing. Reason being, the second line item down here, combination of qualified improvement property, bonus, repair regs. There's different ways to get better tax deductions per the Job Act that you might want to take that road instead of the 179D. If you are new construction commercial, those things don't apply to you, so 179D is the way to go. If you're a big, tall residential building, those things don't apply to you, so 179D is the way to go. But if you're a different type of commercial building, like an office building, one of these may be a better bucket for you, and you may get more money or faster money this way. So you may want to look at that and not go the 179D route. All right, so kind of side by side, that's what things look like before and after the 2023 change. You could get more money if you do a really good job on your improvements and you follow the rules for apprenticeship and prevailing wage and all of that stuff. You got to do whole buildings instead of just individual systems. and it's not a lifetime max. It's a continuing thing. Non-governmental nonprofits can also now be eligible that previously could not. And the really, really awesome thing about this is that the baseline, which was 90.1 2007, an old code frozen in time, continues to be the baseline. So it's really easy to get 50% above 2007. In fact, if you're building a building to code today, you're probably like 40% better than that already. You only got to do like 10% more and you're there, right? So it's pretty easy to do that. All right. I know I skipped a couple slides in the interest of time to make sure we get it all in here. Jason says, question, can't spread the question box open. What the fridge? Are there any commercial tax deductions for mechanical insulation projects on steam piping? Yes, that would count the same as these ones here. So on the commercial side, the big difference here, find one of these on here, is that it doesn't matter at all where the savings comes from. Residentially, you do certain things. Oh, a furnace, oh, a heat pump, or whatever. Commercially, it doesn't care where it comes from. It could be making the building envelope better, better windows, better, more efficient boiler, mechanical insulation on steam piping. It doesn't matter where it comes from. However, just insulating steam piping by itself and doing nothing else in the building is not going to get you 25 to 50% savings over the old code. It's not enough savings. So chances of you doing any individual improvement to the building and having enough to get a tax credit commercially is unlikely. It'd have to be a phenomenal improvement to the building. And insulating steam piping saves a ton of energy, but compared to all the energy the building's wasting, it won't be a big enough percentage to get it done by itself. So it'd have to be like, I'm upgrading my steam boiler plant. I'm going to put a energy recovery stack economizer in there, and I'm going to insulate the steam piping, and I'm going to do something to recover waste energy off my chiller plant to preheat my makeup water for the steam boiler, and I'm going to upgrade my chiller plant, and I did all of those things. Now maybe I might get enough. But individually, one thing, like just changing the insulation or adding insulation, isn't going to probably be enough. All right, let's hit on some of the utility rebates, both residentially and commercially. We won't have time to hit on every single one of them, but I'm going to hit on the ones that I'm later going to use as examples for double dipping. So residentially, for Peoples and North Shore Gas, some of the larger rebates that we have are boilers, like we just mentioned. So someone just mentioned steam boiler piping. Residentially, steam boilers are eligible for a rebate. Hot water boilers, which can be more efficient than a steam boiler because you can get ones that are condensing versions. Those can get more money, so $350 if you get a condensing boiler in there. Gas furnaces, 95% and better, $200. Tankless water heaters, $150 if they're 8.82, right? So if you put in one that is 0.82 and the tax credit was 0.81, you could get the tax credit money and the rebate money from the utility, and you could double dip it on that tankless water heater. Indirect water heater, if it's connected to a condensing boiler, right? And then smart thermostats, you can get some money for that kind of stuff. Additionally, there are rebates that are not mechanical equipment, right? So adding insulation to your attic, air sealing your entire building envelope, doing duct sealing systems, all have the ability to get some utility rebate money residentially on there. One of the ones we'll double dip later will be duct sealing. So if you see on here, you can get $2 for every CFM of leakage reduced. So you got to do a test in and a test out, right? So you do a duct blast test in to see how much leakage you have. You do a duct blast out after you've sealed the duct to see how much you still have. And for every CFM you reduce it by, you get $2 up to a maximum of 400. For you guys that have done AeroSeal stuff, I believe this is still true. The guys from Peoples on the call can tell me if it's not. But residentially for AeroSeal, every AeroSeal project they've had has capped out at 400. They've never had one that didn't seal the ductwork enough to cap it out. Part of that's a combination of ductwork being so leaky, and part of that is the fact that AeroSeal is really good at getting to the spaces that you cannot normally access later on. Residentially for electrical side, most North Shore and Peoples customers, not all, but most, have ComEd. So we're going to assume that for right now. There's a ComEd midstream program, which means the utility gives the rebate to the distributor gives it to the contractor, and then the contractor gives it to the homeowner. Kind of a weird way to do it, but nonetheless. There are rebates for central AC, although you should probably see an email today that is going to sunset that, and there will no longer be AC rebates for ComEd. If this is the first time you are hearing that, I apologize for the sadness of that. But AC rebates are going away for ComEd probably starting today. So do your project right now. Mini splits and heat pumps are not going away. For air source heat pumps, there's two columns here. There's the SEER column, and then there's the SEER 2 column, which is the new testing system. For this year, ComEd is accepting both because they know that distributors and dealers have inventory of the old stuff rated in SEER, and they have new stuff coming in with 2023 serial numbers with the SEER 2. So for this year, they're accepting either or. So you could be 16 SEER or 15 point SEER 2, because remember the new SEER 2 is harder to get because the static pressure testing is a much higher pressure. You can get $1,400. It's a lot of money, $1,400. And then if you do a more efficient one, 18 SEER or 17.1 SEER 2, you can get $2,000 on that one. If you're doing ductless mini splits, you have to hit the SEER and the HSPF requirements, either on the old 17 and 9.5 or the new system 16.1 and 9. And you get $1,350, right? Those are all midstream, meaning you claim those rebates through your distributor. There's also downstream, which means the homeowner mails an application in, or I guess you could be set up so that the contractor can do it, but most people, they mail it in. That's where you're going to find the geothermal, and it's pretty big money, but geothermal costs a lot of money, right? There's definitely, if you're doing geothermal, there's definitely a large opportunity to double dip with the ComEd rebate and the residential tax credit. But other stuff is also on here, like a smart thermostat or duct sealing are on here as well. So residentially, some examples of really good ways to double dip. If you're putting a new furnace in, put in a 97% efficient furnace, right? You get a $600 tax credit and you get $200 back from North Shore Gas or People's Gas, right? Because for that, you only need to be 95% efficient for the gas utilities, right? 97 obviously beats 95, so you get both. If you just put a 95% furnace in, you're getting $200. You put a 97 in, you're getting $800. So get the tax credit money and the utility money. Boiler, same kind of idea. Tax credit, $600 max. You get the utility rebate, and then if you're pretty savvy about it, you will put a smart stat in at the same time and get another $25 for a total of $975. By the way, I did not put the smart stat over here because the vast majority of 97% efficient furnaces need a special communicating stat because most of them are modulating gas valves in order to modulate them. So you're probably not getting the smart stat rebate from for these guys, but you could. Just you probably won't, but you might be able to. Just depends on the smart stat. Duct sealing is fantastic. $1,850 you could get back. Now, you might not get all of that because it's going to be really hard to cap out the tax credit. You'll definitely cap out the $250 ComEd rebate if you do AeroSeal. You'll definitely cap out the $400 Peoples and North Shore rebate, right? And then you'll probably only get a portion of the $1,200 in the tax credit. But even if you got $600, let's say you got half of it, right? That's still $1,250 towards your duct sealing. That's like half of your duct sealing project is paid for. It's done, paid for. So it's a pretty good, in this case, triple dip opportunity you could get here. Do one thing, seal your duct system with AeroSeal, and get free money from the electric utility, the gas utility, and the federal government. Dual fuel heat pump. You could residentially cap out at $4,800, and it's not that hard to get that, right? It's harder to cap out this AeroSeal, but it's not that hard to cap this one out because it's pretty expensive technology to begin with. If you don't know what a dual fuel heat pump is, we have a webinar coming up on July 26th on that. So we'll explain dual fuel heat pumps both residentially and commercially for you guys. But it's a really fantastic way to maximize the money here. And there's a significant amount of benefits other than the free money for dual fuel heat pumps, both for the homeowner, for the utilities themselves, and for the national energy scenario. So we'll explain all of that on July 26th. But right now, $4,800, $2,000 tax credit for the heat pump, $600, assuming you get a heat pump that has all the SEER and HSPF requirements and everything that you need, obviously. 97% furnace, $600 for the furnace tax credit, the gas utility rebate, and then the ComEd rebate on the heat pump. And you add them all together. $4,800 for getting a phenomenal furnace and a phenomenal heat pump to act as your air conditioner. All right, and as I mentioned, July 26th, we got a webinar specifically here for North Shore and People's Gas on dual fuel heat pumps on that Wednesday at 10 a.m. All right, Some examples of commercial utility rebates. I know I'm down to my last 7 minutes or so here. All right, so there's a whole bunch, there's pages and pages of rebates. I'm showing you a couple here specifically that I hand selected because A, I'm familiar with them, and B, they're going to come into play in our double dip examples here in a minute. Boiler plant upgrade. It's one of the best rebates you can do for people's in North Shore gas. I know that steam trap replacement is probably the most popular because it's a fantastic dollar amount, but only X amount of buildings have steam traps, right? A lot of commercial buildings have hot water boilers, not steam. In fact, most commercial buildings have hot water, not steam these days. So focusing on these, you can get $1.25 per MBH input for 88% or higher, which essentially puts you into condensing. Any condensing boiler will get $1.25 for every MBH of input you have. So it doesn't sound like a lot, $1.25. When you multiply it by 1 million BTUs, it becomes a big amount of money, right? I have no idea why we have these 3 rows still. It used to be different mounts on these things and different tiers back in the day, 10 years ago. Now they're all the same. So essentially you can just put this whole thing in one big column, right? So all boilers, $1.25 per MBH input if they're condensing. There's other stuff that you can heat your building with that you might be interested in. So for example, furnaces. Like, who puts a furnace in a commercial building? Dude, a lot of people put furnaces in commercial buildings. It's extremely popular for all these small buildings, people that have like, they have like a little, you guys, your own buildings, right? Some of you guys are contractors. You probably have a shop. There's probably an office attached to the front of the shop. You're probably heating it with a furnace and an AC. You probably are. So it is actually pretty common. Unit heaters, infrared, those kind of things are on here. And then for purposes of our discussion in 5 minutes from now, demand control ventilation, where you put CO2 sensors in to reduce the amount of ventilation air below the code required minimum when everybody doesn't show up to the building. Use CO2 sensors to measure how many people showed up to the building, and then you only ventilate for the people that showed up. 5 cents per square foot. Doesn't sound like a lot. 5 cents, what? But you multiply it by the amount of square foot and ends up paying for the technology. Usually the rebate is as much as the actual installation of the sensors because you usually have all the controls already there ready to receive the sensors anyway. And then ERVs, energy recovery ventilation, 75 cents per CFM on there. So if you've got a lot of outside air requirements coming into the building, recovering energy from your waste air and using it to preheat or pre-cool your ventilation air coming in is a benefit. Obviously, from the gas utility side, we're only concerned about the preheating portion, but later on, when we double dip it with ComEd, we're going to be concerned about the pre-cooling portion of that same exact technology. And there's all kinds of other stuff, like someone had mentioned previously, I think it was Jason, pipe insulation, there's rebates for that, steam traps, as I talked about before, water heaters, there's all kinds of stuff you can get rebates for. But these ones on the screen here are some of the ones we're going to double dip with in a second. On the ComEd side, part of our double and triple dipping partner, there are midstream rebates, which means once again the contractor is getting the rebate from the distributor. So there's all kinds of stuff for that. Rooftop units are a very popular way to get those rebates. So that's some examples on here. Depending on the size of the rooftop unit, you have to hit a different efficiency tier, and then you get X dollars per ton. Typically $85 per ton is the most common size range, but there are other ones on here as well. There's also heat pumps on there. So you can put an air source heat pump in and get 135, 150 or 180 bucks per ton. Some of the small ones that you would combine with a furnace, like at your own building, would be 135 bucks a ton. So you put in, what's a good easy math example for me? Let's say a 5 ton, because then a 10 ton would be 1350. So you would get just under 700 bucks towards that heat pump on there. And then mini splits are on there as well. That's brand new to the program as of like 2 months ago, I think. And it's $390 per ton for a mini split if you hit the efficiency requirements, which is a fantastic rebate. And once again, that's really good for combining with buildings that have hot water boilers. You let the heat pump do the heating from like 40 to 60 degrees outside. And then when it's below 40, you do the boiler to heat the building. And I'm making up the 40. It depends on each project. We can help you calculate that. I'm just throwing a number out there for example's sake. And then other than the midstream, there's also the standard rebates for ComEd, which means you fill out an application and then the building owner gets a check in the mail instead of getting a discount off of their bill from the contractor and distributor. There's pages and pages of things that are on there, but some of the ones that we're more concerned with right now, if you put a chiller in that has a VFD on the chiller, $150 per ton. Doesn't sound like a lot until you realize how many thousands of tons some of these buildings have, and it becomes a lot of money. You put an oil-free, a mag-bearing chiller in there, or the mag-bearing compressor, $250 per ton you can get for that. And then also other, types of chillers on here as well. ERVs, which we just mentioned, there was a Peoples and North Shore gas rebate for an ERV. If you do it on the ComEd side as well, you can get an additional amount of money, either 10 or 20 cents per CFM. 10 if you do a plate, 20 if you do a wheel. So let's assume you do a wheel because you should. It's better for the majority, but not all, but the majority of applications. So 20 cents per CFM plus the Peoples Gas and North Shore gas money. VFDs on fans and pumps and things like that. And then demand control ventilation. In this case, it's $40 per 1,000 square feet, which comes out to 4 cents a square foot. We would add that to the money that we're going to get from the gas utility. And there's all kinds of other stuff too. I mean, there's pages and pages of it, geothermal economizers, building automation systems, lighting, obviously, all that kind of stuff. So some of the better double dip options that relate to HVAC, once again, dual fuel heat pumps. And on July 26th, we have a webinar on that. So if you have a smaller building, doesn't have to be smaller, but typically it's going to be a smaller building where you have it heated with furnaces and cooled with air conditioners, 5 tons of cooling and smaller. You got 3 or 4 of them taking care of a small office or something like that. You can get money, $200 per furnace from the gas utility side and $135 per ton on the ComEd side, and then you add that together, right? So that helps pay for that project. So there's that kind of option. Demand control ventilation with CO2 sensors, as I just mentioned. You get 5 cents per square foot from the gas utility side, 4 from ComEd, 9 cents total. Multiply the 9 cents by the amount of square foot covered by that system that's controlled by that CO2 sensor, and that's a decent amount of free money there. Typically more than the sensor itself costs. We got a webinar on that, exact technology and how that all works on September 27th if you want to join us for that. ERVs. Energy recovery. If you do a wheel instead of a plate, you get 10 cents extra, but you get 75 cents from North Shore Gas and Peoples Gas and 20 cents from ComEd. So you're getting 95 cents if you put a wheel in. You're getting 85 cents if you put a fixed plate in, and that's a nice double dip. And we got a webinar October 25th on that. I will mention that that one might change. I was talking to Glenn about that. I have a slight conflict that day. So it will not be October 25th at 10 a.m. It'll be anything other than that. Maybe the afternoon, maybe the day before, maybe the day after, but we'll work that out and we'll get the schedule updated, and I apologize for my bad planning.
Yeah, we're doing the week before, Ryan, on that.
All right, it'll be the week before. I'll coordinate with Glenn on that. We'll get it locked in. Thanks, bud.
Yeah. All right.
You can do a central plant upgrade. So you're going to get rid of your old inefficient 40-year-old boiler. You're going to get rid of your 20-year-old chiller. You're going to do it all as one big project. You can get money from the gas side on the boiler, money from the ComEd side on the chiller, and very likely at that point you're putting in an automation system when you didn't have one before, so you can get the automation rebate from ComEd as well to control both of those things, those 2 plants. That's a pretty good amount of money you can get for one boiler plant upgrade, because those things are pretty expensive upgrades. We're not talking about a $10,000 thing. It's going to be hundreds of thousands, right? Oh, I think he's out of order somehow. That's fine. I mentioned AeroSeal. We've done that as a webinar a couple times. I don't think we have it on the schedule this year because we did it a lot in the past, but there's a recorded version of it on the Peoples Gas website. Those are custom rebates when you do AeroSeal with both the gas and ComEd side, but the utility partners are pretty good at helping you do that calculation. Some of these projects, man, we did one of the hotels, I think it was a Hilton Hotel in downtown Chicago. It was like it was a 60,000 CFM air handler. Big, huge air handler, obviously. And the amount of reduction was 12,000 CFM of duct leakage. And that wasn't even on a rebate. That was before the rebates even existed. Well, the rebates existed. No one knew how to apply it towards duct sealing. And they did, and they made the money back without even having the rebate. The rebate, man, you can get a lot of money from both the gas and electric side for doing some of these large duct sealing projects. And then heat recovery chillers, which we're going to talk about next month, June 28th. My coworker, Mike Smith, is going to do that one with Glenn because he's pretty good with chillers and I'm not as good. But if you put in an efficient chiller, you can get one that qualifies for one of the ComEd chiller rebates. And then on the gas side, it's a custom rebate. And it seems weird, like, why are you giving me a rebate on my chiller, which doesn't even have a gas connection to it? Well, the reason we do that is because what we're going to do is take the waste heat off of the chiller, and instead of sending it to the cooling tower to just dump the heat outside, we're going to send it back into the building and use it for many heating purposes, either for reheat on the VAV boxes, to preheat my domestic water, to heat a swimming pool, and we're basically going to offset the gas usage of the boiler. So the boiler will not have to run as much because we're going to use free waste heat that we found on the chiller to use it to unload the boiler. You still need the boiler, obviously, and an efficient one would make sense, but you can run it a little bit less or maybe even buy a smaller one in some cases. So there's another way you can double dip on there. And then obviously, any of these things can be combined with each other, right? If you put a CO2 sensor on an ERV wheel, you can quadruple dip that, right? Get 2 CO2 rebates and get 2 ERV rebates, right? You could do a gas boiler upgrade at the same time you do a heat recovery chiller upgrade, and you get a rebate for the boiler and a rebate from the chiller from the gas side and a rebate from ComEd on that thing, right? You could triple dip that thing. You could do duct sealing when you do the dual fuel heat pump with the furnace and the heat pump. You can combine all of these things. And of course, if you have the right kind of project that could do enough of these things that you qualify for the 179D tax credit, you could do that on top of this as well. So it is quite a bit of craziness there. One thing I should point out on the double dipping with tax credits, residentially and commercially, with tax credits / deductions, and let's just do a residential example. Tax credit, and you're going to double dip it with utility rebates. If the utility rebate is a midstream, like it would be for a heat pump with ComEd, you as the homeowner never paid that money. You never paid the $2,000, so you don't get a tax deduction on that part. So let's just say the heat pump costs $10,000. When you calculate your tax deduction, your actual cost is $8,000 because the $2,000 never came out of your pocket, right? On the flip side, on the gas utility side, let's say you did the furnace, and let's just say also it cost $10,000. I'm making up numbers to make the math easy on myself. Your furnace probably doesn't cost $10,000, right? But let's say it cost $10,000 and you got the $200 rebate. You still do the calculation on the $10,000 because the rebate, because you paid the $10,000, and the rebate comes later on after the fact as a check to you. So midstream rebates reduce the amount of tax credit a little bit, and downstream rebates, traditional ones where the homeowner fills out an application, do not affect your tax credit. It's not a big deal because you're probably going to max the tax credits out on those examples anyway, residentially. Just know that when you're doing the math. If you don't like math, I apologize. All right, there's my email. If you need to send me something to hunt me down, I went 6 minutes over. I don't think I've ever once made it at 11 o'clock on one of these. I apologize. But send me a note if you need to hunt me down with a question. And then obviously you had Glenn's info up there. Also, Glenn can answer a bunch of stuff. And between the two of us, we could probably answer 99% of any weird stuff you guys come up with. More questions for me? Sweet. Well, I think we're wrapped up, Glenn, unless you have anything else we need to chime in with.
No, I think that's it. Thanks again. Great job. If anybody has any other questions down the road or any projects you want to discuss, please get a hold of me. Other than that, we look forward to seeing you next month, and have a great summer, and we'll see you in June. Thanks, Ryan. Have a good one.
Thanks, Glenn. We'll see you all later.
Thank you. All right. Bye-bye.